Good afternoon, everyone. Happy Saturday. Thank you very much, Sean. I'm so pleased to have you again for another episode of our market analysis. It's going to be exciting week ahead. This week, I'm going to emphasize more on the markets, specifically on S&P, and also some of the trading ideas. So this week's is going to be more emphasis on that than on the economy, for instance. I promise you next week. I got a lot of material on economy, which I like to go over. But this coming week is like the biggest week on the earnings. A lot of big hitters and mega cap companies are coming with their earnings. So it's going to be the busiest week. So I'd like you to be prepared for that. Next week, we'll go back to the economy and look what's going on, especially with November coming up, and then, of course, the holiday season. So one of the things we're going to do on the trading, I'm going to spend a little time on the Bitcoin ETF. So that's going to be our ETF of the week. Obviously, now it's like the talk of the town. Everybody's talking about Bitcoin, and again, it's the cover of Barron's magazine, and every retail investor you talk to, they're just so excited. So I thought, let's dig deep and see where do we stand, and as far as the future of the crypto. And of course, we are very fortunate to have Sean part of our group. The man who knows more about Bitcoin than anyone else. So it's just great to have it, and I'm sure in our Q&A, if you're interested, we will like to pick Sean's brain about the subject. So with that in mind, I'd like to start, as always, briefly go over the economy. And as you know, with the economy, I don't want to go over the things that you already have the news, you're already aware of it, so there's no sense. I'd rather go dig a little deeper, go under the hood, as I mentioned. So we are looking at the initial jobless claims and the continuing jobless claims and ASA staffing index. As you can see, all three of them, they are the post-pandemic best. So things are looking up in that sense. And also you can see the steel production is actually above the 2019 level. The other thing is I've been looking at, and I've been discussing, is the global commercial flights, because that has been a concern. We've been looking at, I want to see how's the direction overseas. We want to see the activities. And again, this is a post pandemic high. So that's the right direction. Of course, we want to also look at what's happening with the crude oil prices and jet fuel and other things. But this is important as far as the economy. Again, I like to see which direction we're going. At the hotel occupancy, this is a little backdated. So, and then the box office, you can see the movements on those. So basically it's getting better and better, getting closer to 2019. But that's the right direction. As far as the upcoming events, so as far as economic news, we will look at I think the next Thursday and Friday will be important, although Monday, again, the Fed Chair Powell will be talking. So we watch that, some of the announcements. We want to see what is the ECB press conference, which comes at 5:30 a.m. Pacific Coast time on Thursday. That could be market moving in Europe, also with Euro. And then this is advanced GDP quarter over quarter. And then on Friday, besides the Canadian GDP, we're going to look at the core, the PCE, which is more of what Fed follows with the inflation numbers. So those are the things you want to be aware of. These are all coming at 5:30 a.m. They could be initially market moving. So before the markets open, the cash market. So let's watch that. So as I mentioned, I want to emphasize more on the markets. This is October. When October started, when we had the September, I mentioned, September historically is like the worst month, which it didn't disappoint. It did disappoint in the numbers, like it was down, but it didn't disappoint as far as the expectation. It was a down month. And then October is a pretty volatile month. So that's we have seen. So what is happening with the markets, I like to go back again with the sentiment. One of the things is important is the human emotions. And I've said it that, again, as a human, we cannot help it to be more of a news-driven and more recency biased. And we are captive to what is going on this minute, what is the news out there, and we react. So we are more of a reactionary creatures than actually anticipatory, in a sense of taking all the information in and looking beyond. So one of the reasons I say this, I want to look at what happened on October 6th. There was, and this is from American Association Individual Investors. These are more seasoned investors. They're more retired. They are mostly baby boomers, believe it or not. And as you know, the biggest chunk of our wealth is in the hands of baby boomers. They're the ones who invest the most. And yet, it's October 6th, only 25% were bullish, which is 13 or 12.5% less than average. And then about 36.8 were bearish. And what that means, in the next 6 months, they expect that the markets will be lower. So what happens? We fast forward to this past week, they come on Wednesdays, and now all of a sudden we have 46.9% bullish, way above the average, and 27.8 bearish. So all the neutral or hold positions started moving to the bullish side, moved away from bearish, and moved away from the hold. So I like to keep that visual in perspective, because once we get to the actually charts and we look at how the market is done, I like to put all things together. So continuing with that, we look at the fear and greed index, which was that against the CNN. And we are at 67. Last week we were more neutral. A month ago, again, it goes back end of September, we were at 25. We gradually went to 29, 32. And basically there was a lot of fear a month ago. And the only one has been, kind of steady. It has been the Citigroup panic euphoria model. It has been about floating around 82. So it's still a little complacency there. But the other two are, again, these are more to do with internals. The other one is to do more survey. So we had an interesting week, especially, again, the earnings, right? The earnings keep coming. They're coming fast. They're beating a lot. But the projection is what we are looking forward. And that's what, again, I've mentioned, please be aware of what is happening with interest rates, because the interest rates are going to be the driving force and earnings of some of the upcoming earnings. And they're going to be the companies, especially in technology sector. So as a whole, the markets, actually, almost everyone were positive, from technology, NASDAQ up 1.29%, to more of industrial, Dow Jones was up 1%, and then S&P was the big winner. They were up 1.64%. When we look at the segments of, again, all the indexes, almost every one of them were up, from small caps being up 1% to transportation, more economic cycles and sensitive driven. They were up. This is another week. They've been leading last few weeks. They were up another almost 4%. So basically gives you the guidance, seeing all of these being positive, that translates to see that advanced decline line. Obviously, it favored more advances. So we were up last week, we were stronger, but this week we're still up 20 to 14. When we look at the different parts as far as asset classes, the dollar is important, but the dollar has been flattening. And because of that, then we see how it has affected the commodities. Now, the bond market is what, again, we emphasize. The interest rates, again, crept up tiny little bit, but they still crept up, and the bond markets actually, they dropped. They had a bounce on Friday, which we look at the charts. And then when we look at the crude oil, still on a cruise line, they still going up, and consequently, what has happened, the inflation numbers actually dropped a little bit, and it was more to do with the food pricing than gold or crude oil. So uh, again, about 38% of the CRB is in the uh, food, like grains and the soft commodities. So gold had an okay week. They were up, but we will review gold as a whole. We will look at our gold trade every week. I like to do that because of the consistency, so you can understand where I'm coming from, why I'm taking this trade, and to see how we can actually take advantage of our timing with that gold trade. So gold had good slightly good return. So let's dive into the charts, because I think that's what I'm going to emphasize a lot, especially with the S&P cash and the futures, to see where do we stand as far as the markets go. As I had said, again, the markets, they were down for the month of September. So as you can see, I did a Fibonacci from the high of September 2nd, right before the Labor Day weekend. We talked about the Labor Day. And, usually markets like to go up the week before Labor Day, and then after that, people come back from holidays from Europe and the United States, and then the markets get really on a real gear, and you can see how the volume starts increasing. So that's the September, and then we go to the low of in October. We had the month of September has been going down. So I want to look at this area, October 6th. And this is the area we had the biggest fear. When you look at the American Association of Individual Investors, when we look at the CNN Fear and Greed, and look what happened. Right there, all of a sudden, now we had a nice bounce. We had a technical, you can see resistance there. This was based on the Fibonacci. As you can see, we hit the ambush zone between the 50% and 61.8%. Those 3 days we got rejected. We came right to that 23.6% part right there, and then we bounced back, and we just broke through and went over 61.8. We continued, and usually when we break that 61.8, it's very easy to go through the 78.6 and then continue. Usually it likes the markets, once we pass that ambush zone, that 50 to 61.8% retracement on Fibonacci, if you convincingly break that 61.8, markets like to go to the previous high, which we started. So that's 100%. So, and it did happen. So we broke above the moving averages, which is, these are the 8 and 21 and 50. And basically you see these moving averages, there's a contraction. We call this, I call this bow tie. And the reason is bow tie. When the moving averages converge and then open up, this area is a really good area for going long. Now, the question is, and that's why we're gonna do quite a few on the analysis of where do we stand at this moment? Because what we have done from the low of, this October, we had low retracement. So we had the low, we had the lower low and lower high. But what happened? Now we have moved to higher low, so the trend changed. But we've had 1, 2, 3, 4, 5, 6, 7 days in a row of up bars, up days. So basically, I want to think of this as a hiker who's running up the hill, and with no pause, no breaks, no water break, they just keep going. The markets, healthy markets, they need pause. So we've had this past 7 days, we've had this big run. So the more we run, the more tired we become and the more rest we want. And, our heart can stop. So basically, this is a crucial point, in my opinion, at least in the short term, and we will review it a little more to see would the markets take a breather, and actually it will be healthy if they retrace. If they really had a heart attack or something, then we're going to roll over. So I want to just keep this day in your picture. As you can see, this is the Friday. We went, right against the double top, the high of that September 2nd. We paused. Here we are on Friday. And one of the concerns could be also, you see the volume is pretty low. And usually when the volume is actually low, even in the big up days, is initially that's a short squeeze. So probably we had a lot of shorts, and they got squeezed right around here after we went to high of this bar. And again, we went over the 38.2% retracement. So they got squeezed. And because of that, the technical traders came in. So these are the things that I'm looking at. So I wouldn't mind to have a little pause and actually down, because again, this has been a pretty big move. And you can see the volume actually was higher than the last redemption volume was, distribution was higher, although we were a little bit. And remember, the ES actually the last half an hour, so we had a selling. Actually, after the event, the cash market closed, the futures had it down. And one of the contributors was like, Chairman Powell is talking about maybe the tapering soon, because they feel that the economy is doing well and so on. So we will review the futures market, which is will be the next slide. So S&P cash, we are actually not embedded yet completely. Monday will be the time we will see if we are embedded. We are against the Bollinger Band, so that's what you see, that there is this the doji candlestick. So that's our pause. So we've been hugging this. We call this, again, I call it the railroad track. Sometimes they're called monkey bars. We are hanging from that Bollinger Band, but we want to hang from it. We don't want to let go. And this is what has happened. But when we let go, this is what happens. We drop to the floor, the support, and hopefully it's not too far so we won't break our legs. So here we are. We are next, this 18-day moving average. So if you are overbought and then we reverse, usually that's where the potential support will be. The MACD is up. As you can see, this was a nice confirmation right here telling us that the MACD, remember, it leads to the trend changer. So it gave us a warning once we were above this moving average, which is 100-day and 18-day. It told us, trend has changed. So we shall see if this is going to get higher. So the trend's still up, and the weekly is still up. The question is how far of a rest do we need? And that's for S&P. NASDAQ has similar story. We hit the top of the Bollinger Band, and actually we were down for the Friday. MACD is kind of trying to roll over, even though the trend is up. So the NASDAQ is even more sensitive, because what we have the technology stocks coming up with their earnings. So we are not going to look backward, and we will see all the big names are coming up, from Amazon, Facebook, Apple, Microsoft, biggest one, Google, Alphabet, which I really want to emphasize that. We want to watch their earnings. Shopify, all of these, we want to see how they're going to react to the higher interest rates, and what is their projections. What are the projections as far as the supply interruptions, and what is going on? So we want to hear that story. So NASDAQs are giving us a little heads up. So we want to watch that. As far as the Russell, it's a little on its own world. We look at the transportation and Russell, we see they are, been stronger, although Russell was also down a little bit. We are overbought, not embedded yet. So Mondays, that's another story we want to watch. But in the long run, we've talked about it, we're still in a channel. We are really haven't done a lot. And you can see that the volatility has been pretty low. So let's watch that Russell. The Dow Jones has been stronger, and we talked about one of the main reasons being the as far as the indexes go is based on the price cap, basically the United Healthcare being the largest, the Goldman Sachs, which has done very well. So these stocks, they have been moving the Dow Jones. So you can see it had a nice move. We are embedded. The MACD still up. So the Dow Jones has been, the stronger of other ones. And then here's the transportation. Look at this huge move. Again, you can see once the MACD crossed and kept going, this has been, and this is what I mean by monkey bars. They're just hanging to that Bollinger Band and not letting go. As far as now, we come to the VIX. So VIX, this is, I believe, this is the lowest, or one of the lowest we've been since the pandemic, since March of last year. So what do we do about that? What is the markets are telling us as far as the volatility goes? So from the chart point of view, we still have moves we can go down because the Bollinger Bands are opening on the downside. We are embedded. The actual MACD is down. So there's a lot of negativity for the VIX. So far we want to hold on and then say, all right, this is low. Things are not looking good. But how low can we go? So that's part of the lesson of the week. I will discuss that as far as where VIX stands, but I want to just visualize where we are. We had a doji. The idea would be, would a play on VIX, maybe going long in a, remember when we talk about VIX, it's going to be a little more short term. Maybe would we have a nice bounce to that 100-day moving average? So would that be a viable instrument to play rather than shorting the markets perhaps, or buying puts, or that bias? Is it going to make sense to play long VIX? So these are the thoughts you have to do this weekend. See, again, we don't have any confirmations, but just purely on where we stand as far as where we've been. And one of the reasons is, while the VIX had gone down and now we're pausing, the volatility of VIX actually has increased. Now you can see we're still embedded, but what is happening with the VVIX, which tells us that there is, and we go back to futures again, a lesson of the week. So I hope just be with me. So once we get to lesson of the week, we can look at where the VIX stands at this moment. This is the cash again. This is CBOE VIX. Where we stand, you can see the MACD is trying to cross on the VVIX, and there is although we're embedded, it's trying to go to the oversold, and momentum might be changing. So let's watch this. We got rejected at 18-day. We've been rejected quite a few times in the past. So we shall see if this, after getting close to that lower Bollinger Band, will it go? It already hit 18. If we break it, we will go to that 100-day moving average. Interest rates. So everything is really based on these interest rates. So basically what this is a strength. You could see we came that 18-day moving average and we just bounced on that. Now we went outside the Bollinger Band, we came down, but the trend is up. We're getting a little tired, but still, that the momentum is going up. We are not embedded, but again, we're getting close. Actually, we need one more day to become embedded. So we are almost double top on this. We just passed that the highs that we were in May. So is this good? Well, we shall see what is happening. If there is a higher rates, what is happening to financials and the technology? So be aware of that. We want to watch this and how the Fed is going to react. Here we are with the 10-year note. You could see again, when I go back, you could see the rates dropped because of basically we had a little reversal based on going up. It was more of a technical reversal at this time, going outside the Bollinger Band. And although we are basically on the MACD, the trend is down. We are embedded, and so there is not much really reversal confirmations yet. So the same thing with the 30-year bond, which is, again, it's more towards, again, taking the inflation concerns and the growth of economy into the picture. It looks like a double bottom at this moment. It had a bigger bounce than the 10-year note. Also, we see a little divergence on the stochastics. The MACD has been flat, so it tells us at least the long-term bonds having a little more oomph to go up, and at least, you know, we came very close. We hit the 18-day, and if we break through that, there is a good chance we will go basically set up at least to this the neckline here with the 100-day moving average. I go a little faster, look at the XLF. So you look at what is happening with interest rates and with all the earnings came, and here we are. So XLF hugging that Bollinger Band, we are embedded, MACD is up. So far, basically it tells us the healthy financial market, and they're not ready to give up yet. Now, the dollar is, on the other hand, I mentioned last week, the dollar has become a part of the risk protection. So we talk about gold and Japanese yen, but the dollar has been the one. So when the markets actually go up, the dollar is usually loses in a sense. So in a sense, that's what has happened. The dollar broke under the 18-day, and now the volatility is narrowing. Again, we are waiting for the Fed to see what they have to say as far as, again, it came out with the chairman. Monday, we'll see what they has to say about the tapering and what is the future of interest rates. So because of that, you can see the MACD has broken, but the trend is down. We are oversold, so we want to watch this. If this gonna go back up, and we will bounce out of this Bollinger Band, see what will happen. Now, consequently, because of the weaker dollar, look what happened to gold. So this is another chart I want you to remember. So remember that ES, or the S&P cash chart. You want to refer back. And I want you to look at the gold chart, because we're going to talk a lot about the gold as far as our trade of the week. And we want to review. So the gold has been really having a support at its 18-day moving average, going back and forth between the Bollinger Bands and a 100-day moving average. And what happened, we had a nice bounce on Wednesday. Thursday was indecision. And then we had a doji, and we didn't know which way it's going to go on Thursday. And again, because of the doji, but then Friday, we had a nice bounce, especially the opening. We had a nice bounce. We did go outside that 100-day moving average. And guess what happened? We got rejected. So this was a more of a technical play, and we just closed right under the 100-day moving average and also outside the Bollinger Band. So you can see is look at the fundamentals, but there's a lot of times these charts, they give you story. They tell you the things that you have to be aware of, especially if you're looking at the short-term trading and investing. So this has been the resistance. Every time we've gone above 100-day, we've been rejected. So this told us, okay, calm down. As a matter of fact, you can see this is my resistance from months ago, and that also played a role right here at 1798. We hit our pivot point and we got rejected. So just remember that again when it comes to trading. Now, a few weeks ago when we were talking, I mentioned about silver. I favored silver over gold. If you wanted to do any type of an option play, maybe selling puts on silver, like say the 20 SLV. If you wanted to go to debit vertical on it, you want to go long, I felt that silver might be a better play. And basically, once we started the MACD and then the stochastic momentum started moving, it actually has done, it's been stronger than gold. The question is, it's a similar thing with gold. This would be a good time And I think last week I mentioned, just be cautious. If you have some profits, it might be a good idea with the 100-day moving average coming, which you can see we go all the way back to June. It might be a good idea to take some profit off table, all right? Because it has been a nice move since then. So if you're really long term, then hold on. Might be a good place if you want to sell some calls against your position. So just think about that. So we shall see again next week. We are still embedded. The MACD is up, so I'm not saying go short. I'm not saying sell all your position. It's always good to take some profits because you're in the business, and your business is to make money. So it's not about proving that you're 100% up or 50% up. It's about managing your positions, managing your risk, and having some capital in your pocket so you can play other opportunities. All right. So we go to something. This is another subject. Please remember this chart. Basically, the Bitcoin. I mean, it's becoming really more mainstream again, and we talked about the strength of the Bitcoin. We talked about MACDs going up last week. We were embedded. One of the things, if you go back a few weeks ago, you can see that the resistance at this area, which I had drawn a few weeks ago, and what happened was we hit the all-time high and got rejected. And this coincides with exactly when the BITO, the ETF, the Tuesday. This is the Tuesday BITO came into the picture. So much excitement, everything. We go hit all-time high, the resistance, and here we are 2 days later. So watch for that. Watch for this on Monday. We are embedded, but in the danger of losing that and becoming overbought. Watch the MACD. The MACD hasn't given us any change of trend confirmation, but it's looking at it might cross, but that doesn't mean anything just because it's close. Because it can easily turn around and just move up, and as you can see, go to the Bollinger Band. I mean, there are thoughts that Bitcoin could be 100,000, and of course, there's a lot of talks about $1 million Bitcoin. All right. So with that, we've discussed that the copper had a beautiful run, but look how many days we stayed outside the Bollinger Band. 1, 2, 3. The 4th day we were up. The 5th day we could not. And as I've said, it's very difficult to stay outside the Bollinger Band for 5 days in a row. And majority of time, when we lose our embeddedness and we become overbought, we like to go and kiss the next support, which in this case is 18-day, and then the next one will be 100-day. So let's keep that in mind. Crude oil, this is again the railroad track, just loves to hug that Bollinger Band and staying right under the Bollinger, just hanging from it. Monkey bar, you can see. You can also look at it as like almost it's a Christmas light. So it's just hanging, and it just the trend is up, embedded. My day is up. It's getting a little tired, but there's no indication that I want to go short crude oil. Energy is getting tired, the XLE. So we are flattening here, and the MACD is trying to cross. So let's watch that. We are embedded, so there is no shorting or anything, but it tells us if you want to take a little profit, this is a good area. If you have any type of energy stocks, which we will have more coming next couple of weeks, we will have some energy sector coming with their earnings. All right, I hope that was helpful. So keep those visions, especially with S&P and Bitcoin and gold. So we will discuss that more. With that in mind, let's look at expected move. Why I like the expected move? Because there's tons of money, billions and billions of money in the option market is being traded on this. So basically, I respect that. And that's what they look at. They look at that one standard deviation of 68%. And they look at how we can be contained inside of this. And last week, for instance, on SPX, we were looking at the $61 expected move. And what did we do? We went right that edge of expected move on Wednesday. We crossed it on Thursday, we came back very close to edge of that expected move. So there was strength, but we respected that, but we finished a little bit outside of that. We talked about volatility. So for next week, believe it or not, our expected move is going to be about $51, $52. So you can see the contraction. So we've been going from 61, so the expected move is narrower. And basically all that means is the market is expecting that S&P is going to go up either $51 up or $51 down on a cash market on a $4,500, $45 market. So keep that vision in check and see, this is what the futures market did. So after the market's cash market closed, we had a sell-off on the futures market, and look where we ended up. We had a intraday high, all-time high, and we came and closed right at the expected move for futures market. So that's the respect that there is for this expected move. We go one further, look at the QQQ, the NASDAQ 100. And again, we've been hugging that expected move. And finally on Friday, we just tried on Thursday, came back on Friday and closed under. So we've talked about, again, this in and out option strategy. It definitely would have worked very nicely here with the in and out, perhaps doing it a put in and out in this area on Friday. So just a food for thought. It's a very limited risk. It has limited profit, but also it's a 50-50, but it works more often than not. So that was an idea with limited risk. And then you can see IWM finished right under the expected move, came close. The Dow Jones, the YM, closed right under the expected move. And look at what happened to the bond market. We had a sell-off, went outside the expected move, and on Friday, we had a nice bounce, came back inside. On the other hand, gold, and just visualize where we were with the resistance, we did have a big day on Friday, nice gap up. Where did we finish? Right on the edge of upper edge of expected move. Silver on the had a lot more strength. So silver actually went almost was actually 2 standard deviation. So we had a nice move. Again, that was a big gap up and became close. So silver is a little more erratic. So I mentioned to you, if you are in a futures market, you know, silver is not the place you want to be. It has a very volatile moves. It's a big contract, a $5,000 contract, and it's like, it can chop your head off. So I would not trade futures on silver, but I would definitely do ETF and, you know, the option plays that we've been discussing. I would rather play gold if you're going to do futures. So these are the reasons because of these movements. XLF, what can I say? Right on the edge of expected move, upper edge of expected move. And then the XLE, as I mentioned, we went close. We did the 52 weeks high on the XLE. We went to look at the close to the lower edge of expected move, and we came back. All right. All right. I hope so far it has been helpful. We talked about the markets, and I'm going to continue with analyzing the markets, and then we will talk about the gold trade and our option trade and also Bitcoin. So let's look at the lesson of the week. So we've talked about inflation. Once in a while, I like to revisit how the S&P as far as reacts to the different inflation rates, why the markets are watching the inflation rates, why is it important to feel, to understand, is this transitory inflation that the Fed is trying to say it is, and the market is like debating it. So I just thought, let's look at since 1948 with the different inflation rates, what the market has done the following 12 months. And why is it important to make sure the inflation rates are in check? And the inflation is good up to a limit, but too much inflation also can be dangerous. So here we are. So basically, the inflation rate of, we can see about 2% is a sweet spot under 1, the best return on 1 to 2. And where we are right now, that's not the most favorable. The idea is, again, this is transitory. So this is not going to be a 5 to 6%. So what's going to happen basically with the market, this is, if it just continues, then there's going to be a lot of concerns. Why it's interesting, why is it the 6% and higher? All of a sudden the markets are doing well. And the idea would be that will be, as far as we talked about price elasticity in our lesson, this will be, maybe the consumers will be responsive. We will have a wage inflation, but also with the price of inflation, the wage inflation, they can afford that the companies will keep their profits. So that's one of the reasons. Other than that, I think, that's what a lot of central banks, I think, they look at this 2% magical number. So that's just a food for thought as far as the future. Again, these are history, right? So it's nothing guaranteed. I thought like a little tidbit of information, the lowest inflation we had actually was negative 3% in between 1948 and August of 1949. The highest inflation we've had since 1948. I'm sorry, it happened 19 August 1949, since 1948. Since 1948, the highest inflation we had, it was in March, April of 1980. I remember that vividly. I was a student in college where I worked 5 jobs. I remember my earnings, and I had to get I couldn't get student loan, by the way, so I had to go get an actual loan at 22%. That's the only way I could, pay for my school. And the inflation rate was 14.6%. We had a misery index at that time. All right, so let's jump to something I mentioned about the VIX. So we talked about VIX being about 15.4 or so. This is basically on CBOE. That's the number you see on the VIX. The numbers at the cash, and you see we've been at 1543. But VIX follows the futures. So what I'm looking at basically November, October, VIX rolled, we're going to November. And what is happening to November? That's the nearest month, and it's at 19.2. What is happening on December VIX is 21.2. What is happening to January VIX is 22.8. So there's a few things coming to our mind, and that might explain that the VVIX, the volatility of VIX, why it's happening. Remember, the VIX is a 30-day. When we're looking at it at the time period as far as the options volatility on S&P 500. These VIX are looking at the futures, 30-day futures. And so the question you have to ask, there is this discrepancy between the futures and the cash, or with the options on the CBOE. Either this has to come down or this has to go up. Eventually there has to be some normalcy, right? So the means. So eventually this maybe can come down a little bit, this has to go down. So what I look at is about 4 points gap. And that was one of the reasons I thought the way I read it, perhaps maybe VIX is in a position to go up in a sense that we are pretty much undervalued compared to our futures. We also have contango, and this is a big difference between, we're looking at the November and the December, that's 2 points. That's huge. So either this has to come down or this has to go up. So I hope you can see what the market is looking at. The market is not looking at a lot of complacency in the futures. They're looking at, we will look at more volatility in upcoming months. So again, this is something, my whole objective again with our classes is, I want to, it's about critical thinking. It's about something that I want to go dive in and look at things from a different perspective rather than just getting the information all the time or listening to the news and other things. So these are the things that intrigue me. So I hope it makes sense. Next slide, go back to S&P. And I also want to look at NASDAQ. So this is the chart of S&P, the most recent one. As you can see, we hit all-time high on September 2nd. This is where we are as of Friday. This is the cash market. We have the doji, so it's almost like a double top. But anyway, I want to look at that. And then I also want to say the NASDAQ. Again, we had a nice high in the beginning of September. We are not quite to the high of September yet. So we've had a little sell-off. Again, I believe I would definitely watch the Google earnings, and then Apple and Amazon will be on Thursday, and to see the guidance, because the NASDAQ is telling us, this interest rates could play a role. So let's watch this. So what I wanted to do, I'm looking at this chart, and as I mentioned to you, I like the, I like the history, and what I wanted to see, what happened October, exact same time in October of last year. So just bear with me. This is September. Right before Labor Day, we hit the highs. And this is NASDAQ. Again, we hit that highs. September, we had a sell-off. End of September, it's like a little bit, you can see there's a little lag. So this year, we looked at like around October, we had a, just go back. You see, right around the beginning of October, we started turning around and go up. Last year, last year, we had toward end of September, we decided to go up till mid-October. Then the last 2 weeks of October, we had a sell-off, and the same thing in we can see middle of October with NASDAQ, we had a sell-off, and of course, then we had this continuous going up, and there was a couple of reasons for that. So we can fundamentally say it was the election jitters, the unknown, and again, the election jitters, and then right after the election, the Pfizer comes, it's the vaccination news and all that, and the market had a relief rally. So we don't have the elections, but I'm a historian, so this is, I look at probabilities. I want to look at different tools. So I'm just looking at this and I'm saying, well, is it possible? Is the human psychology is repeating itself? Is there any type of a doubt? So I'm not saying we're going to have a sell-off or like exactly like this. I'm just thinking it's October. Would it be? I don't know. Is it possible? Yes. So it is just a food for thought. So again, it was really interesting how the October, September behaved compared to last year. What is happening today? The next thing is, I like to talk about, last week's lesson was about breakout. And actually we talked about Alibaba, and you could see actually it's continuing. It still has, still keeping up with this trend. So, while it's resting. The point was with the breakouts, you want to have the confirmation. And one of the things I like about breakouts, as I mentioned, I like to have a long base. So this is a Chinese credit services company. So forget about the company itself. I'm not looking at the fundamentals at this moment. Basically, I'm looking at the breakout and the entry and where the exit has to be. So what I did, when this news came out, I did a chronology of the event. So I was really interested. This was October 19th. I'm looking at it, and this was a Tuesday. And then we looked at basically the breakout would have been the high of this. I'm looking at the volume. So we are going, okay, this is attractive. And then boom, we just continued. So that was Tuesday. You look at, we were up 42%. So we came from $2 to $9.51. The volume, the float on this stock was 5.4 or 5.2 million. That means only 5.2 million shares are available. And here I'm seeing 30 million. And fast forward, this is the next day, October 20th. Look what happened. This, you would say, oh, this is a big move. What happened? On Wednesday, what we had 58 million, almost 59 million shares changing hands. Remember, there's about 5.4 million shares are available. So if I'm a buyer, I'll buy it because I feel this company is a good company. I'm going to hold on to it. But it has churned over 11 times, more than 11 times. So that's called speculation. But I'm looking at this. After looking at this, I'm saying, you know what? We do not have a confirmation of reversal. And the reason for being is this candle, the open was a high of this candle, and it continued and it went up. So now that day we're up 45%. This day we're up 98%. Just for the week, you're up 330%. For the month, you're up about 1,000%. All right, so you're at about 1887 on Wednesday. So far, so good. So I just want you to play with me. So a lot of people might have, we've talked about the money management. So I've shared with you that I like to take, use that 1/3 position. I make 50%, 100% every time I take 1/3 of my remaining position. So this could have been maybe one of those times. So let's fast forward to Friday. And this is what happened on Friday. On Thursday, this is what happened. I didn't take a picture of it. My apologies. I just didn't want to bombard you with so many charts. But this is what happened on Friday. This is called engulfing candle. And somebody bought this share at $22. So this right off bat, it tells you, that the journey is over. You're done. Take your profits. And of course, the Friday comes and you're at 540. 582. All of a sudden, for the week, we are down 4.7. So we went from 330%, actually even more. On this day, we were up 400 some percent. And now we are down 4.75. We went from 1,000% or 1,300. I was looking at Thursday, we were up 1,300% to 200. But so the idea is, if you have moves like this, when could have you been ahead of the curve and taking your profits? So one of the rules that there is on a distribution, what I look at is called, especially in the long bars, I look at the half body. So what I look at is if we go below half of the body or we close below the half of the candlestick body, that's distribution, I'm out of that. Now, the question is, by end of the day, this is too late. I mean, this was already engulfing. Of course, it was telling me, well, we are distribution, you're just getting out of this. So the question is, as soon as would have been a heads up if I went below this, what if it was reversal? Usually, again, once we go below that half body, you should be out. But then you're looking at half the body is about $14. Now, still, I mean, you're giving up about $8. So what I look at, I like to go with the shorter term, and I look at the 60 minutes. So if you're in this volatile investments, there's a couple of things you could do. I would look at this. This is a Ichimoku, and as you can see on the 60 minutes, we are moving nicely. We are above the turning line, the standard line. This candlestick still tells us, hey, you're good. And all of a sudden, we have this called blow off candle. And it came and it broke right below this body. So we closed below half of this body and we went all the way. And then this candle basically then completely confirmed it. So what we could have done right around on 60 minutes, if it was around $18, we would have had our confirmation that this is the time to get out. So about $4 extra. You can also move to 30 minutes, go to 10, 5 minutes. But this is how you can be ahead of the curve and knowing that, as I mentioned here, would you be out? Nothing yet, because you're still above the high of this, and nothing yet because you still, but every day you've got to watch this because look at this unbelievable volume.
and that's what you can get out with nice profits. So you don't leave anything on the on the table. So I hope that was informative, because a lot of times you will see, a lot of times you see unknown stocks that they have this huge moves, and some of them just continuing, but you have to know when to get out of these. So again, either you have to do position management or just watch the technical side and get out. All right. Okay, the other thing I mentioned to you that I like to discuss this week, we're going to talk about the Bitcoin ETFs. So this is Fridays, and I'm watching the 1 minute futures on Bitcoin, which is on CME, and I'm watching 1 minute on BITO ETF. At that moment, we had like 11 million shares. But I want to take a look at that 702, I believe it was 702 or 703, somewhere around here. I want to look at this huge volume came in, and it corresponds like exactly huge volume came in the futures market. The reason I want to share this with you is historically, when you have an exchange traded fund, or but maybe fund, the funds, especially if they are the futures market, and we will discuss the BITO, how it's structured, they follow the futures market because it's the exchange traded fund. It's like any index. The index follows what happens with the futures. And let's say it's a corn, it's a wheat. Well, the corn, if it moves up or down, then it affects your underlying ETF. The interesting thing with this was it was actually ETF is moving the actual futures market. And that's why I put arbitrage. This, when you're looking at 222,000 or so in 1 minute, that's not retail investors. So there is a lot of algorithm programs are coming in. And because of that, is that maybe they buying something at a better price and selling it here, or the opposite? And that's why I said arbitrage. And we want to watch this in the future. So if it goes a little deeper, I just want to tell you that there are things like this. The arbitrage is, we look at two very similar assets or close assets that there is a price discrepancy and there's a price separation. So we can see that a lot in the currencies. For instance, you buy one currency and sell another one, and basically just looking for that little bit of arbitrage, and then you have millions and millions. You can make a lot of money. But that was really interesting. So if you're interested in following something like this, again, that's big volume gain, and you can see again the similar, not the exact same extent, it happened. This is just a 1 minute chart. Again, I'm looking at. You can see these big spikes when it happened. All right. Okay, let's talk about the trade of the week. So there's a few things here, the ideas about the trading I want to share with you. The first one is, as always, we look at the futures market on a 5 minutes. We usually play that gap. This week, is notice there is not many gaps except Monday morning, which is still open. So other than that, I thought, since we don't have a gap, if you recall, one of my strategies is the first 60 minutes. As you know, on the futures market, especially I use the S&P 500, the first 60 minutes usually gives you the high of the day or the low of the day. So basically, based on that, you could have a very nice strategy, whether you do spreads, whether you do directional, whether you play the futures market, you know where your support and resistance is. So let's review this. This is our Wednesdays. This was the low of the first 60 minutes on Wednesday. This was the high of the first 60 minutes on Wednesday. So what happened on Wednesday? We tried to go break above the high of that day, and we got rejected immediately. So right there, you perhaps could have done a trade knowing that this looks like a range bound. And look what happened. Every single time we tried to break above the high of the first 60 minutes, we got rejected. And what happened to the low of the first 60 minutes? Look at this candle.
we got rejected again. So this was very orderly, range bound. You could have actually even do iron condors. I mean, you could have done verticals, credit spread on put, debit spread, credit call spread, debit call spread. So here, debit call, debit put. I mean, you just name it. There's quite a few strategies. Or if you're futures, you could have just gone directly, shorted it, or gone long, or you could have just bought a put, bought a call. But the thing is, it was very orderly. So let's fast forward to Thursday. We had a very short, again, small gap down. It was filled in, within a few minutes, 20 minutes or so. So what happened here? This is the low of the first 60 minutes, which is incidentally corresponds to the low of the previous day's 60 minutes. And then this is the high of the first 60 minutes. And actually, no, this is the high of the first 60 minutes. We went through that. I put it in purple. So that was the high of the first, actually, no, this is the first. So you can see we actually kept the previous day's 60 minutes right here. We did go up and got rejected again. So what did we do on Thursday? We played around, and finally we broke above that 60 minutes. And once you have a confirmation, 2-candle confirmation, look at this nice move. You would have gone up, make a good, again, if you do futures, if you do options. So that was a nice day. And then that's actually, we had to sell off the last candle. Again, this is the futures market. So this is Friday. So bear with me on Friday. Friday we opened. So in purple, this is Friday's low of the first 60 minutes. This is Friday's high of the 60 minutes. And that's an interesting thing is the low of the 60 minutes corresponds to the high of the previous day of the 8 o'clock. So basically, but has nothing to do with this. This is actually this 60 minutes. And what did we do? We never went back to that area. Once we broke the low of the first 60 minutes, we went down all the way to the low of Wednesdays and Thursdays 60 minutes low. And what happened here? Got rejected, and we went back, and then eventually we ended up floating inside our first hours or first 60 minutes of Fridays, and ended up closing right on the low of the day in that. So please, the reason I share these is sometimes you say, well, I don't have any strategy for the day. What do I do? Again, the futures market is more fluid, so it gives you a little more opportunity, but you still, if you are looking, especially I can see, I mean, you have a full-time job, and so that's why sometimes it could be difficult. But as a trader, there are opportunities like this that allows you to have a direction and give you more conviction. Everything is about probabilities here. So because I have these and having a tight stop loss, so make sure, if you got rejected here, and again, this was a nice confirmation of rejection of this candle bar, then you would have put your stop loss right around here and continue with this. All right. I hope that was helpful. So I want to emphasize, we talk about usually the gap play. I want to do some first hour play. The second, it's the trade that we did on Thursday. This is our gold trade, Thursday trade. What did we do? I showed you the charts. We had the resistance on the chart. So what did I do on Thursday? I usually do minimum of 5 contracts on our one-day gold trade, right? I go up to 20 contracts, and I have to do 5. I was not too convinced, but because it's the strategy, I usually say I hold my nose and I go in. I somehow would have been a good time to have a COVID with the smelling loss. So perhaps I would have liked to go 20 contracts without smelling it. So here I went with 5. So as always, I got in at, based on 60 minutes, and I got in around 7
10 or 7. So at this price, I always do at the money. That's what, because I'm just working on the price. I'm not looking at, it's not a long term. So I don't look at the delta. I don't go within the money. I don't go out of the money. I basically go at the money gold trade. And my whole goal is to get out before end of next day. That's it. It's a 1-day trade. Could be that day or the next day. So I got in here. As always, you can see, because I had 5 contracts, I put my profit targets. This was my 100%. Then I will have a runner. And the runner is a discretionary, and I usually do the trailing stuff. In this situation, I just want to show you the whole thing, what happened. It was interesting that my 25% hit at 30%. Well, whatever the reason it was, I got a better fill. So I was out of one contract, and this is that beautiful gap the next day. I gotta be lucky. I wish I had 20 of these. But anyway, all my 3 remaining positions, they got filled as soon as the market opened at 6:30 and change. All the contracts, the 3 contracts got filled. So I had 1 contract left. So this was, I got in about 80 cents, and we got out about 260, 270. I mean, that's like a 200% return. So you can't, it was 3 times the price. So then around here, I usually do the trailing stuff, but I was looking at the charts and I decided, you know what, I'm just going to close at the market, not even the limit. I just closed my position at the market. I missed another move. It would have been, this trade could have been a 300%er. And I wish I could have said, oh, I wish I didn't get out of here. But that's the discipline. You see, immediately I repeat myself. I put my targets as soon as I get in. So there's no emotional attachment, and you get lucky like this. So it went up, and then look at this big drop. At the end of the day, we still were in the money. That was a still nice, beautiful trade. But I mean, this is dropped over 50%, actually close to 70, 80%. But I was out. So the question is, why did I go out at the market? By the way, this is the picture I took right as soon as I got out. So I didn't know what the future is going to hold. I just want to take a picture and say, well, I got out here. So there was few reasons. Number one, we remember the 100-day moving average. So that's back of my mind. So I'm saying, you know what? There is resistance. Then I'm looking at the 78.2% retracement. Okay, that was another reason. Then I'm looking at the Heikin-Ashi with the LRC, linear regression channel. This is on a daily basis. I had gone outside the second standard deviation. That also gives me a little hesitation. I think there's usually will be a retracement, at least on that day. This is end of the day, by the way. So, we did go up, and that's what, I got out right around here, although it did go up even higher. And I also looked at the 60 minutes Heikin-Ashi, and again, linear regression channel. We hit the high of this 169. This is a 60 minutes hourly. Again, we were right around here. I'm looking at it and said, you know what, the odds are we cannot continue going up. Why do I want to be greedy? And then the rest of the day, I have to think about it. I could have done, again, the trailing stop, which is pretty good. But at that time, I just did the market and I was out. But I just want to be more discretionary to share this with you. All right. Another trade that I did is continuation of the subject stock of the week last week. So I want to continue with that story. Was earnings play on Tesla. And I went deep on that, and I will follow up with it this week. And my whole idea was about the expected moves, how the Tesla has behaved in the past after its earning. So what can I do, knowing that what Tesla has done in past 8 quarters, what is the actually expectations, what is the expected move. So basically, I did a trade on Tuesday, and what happened was Wednesday, right around here,
that's after hours, Tesla had its own earnings. So I didn't do it on Monday. I did it on Tuesday, and basically I sold puts that I had mentioned to you, almost 2 standard deviation. So I collected about $1.67 or so, 69. I sold 5 naked puts. Again, you need to have a large margins. So the reason I want to share this with you is just the mechanics of it. So you can do this idea with so many earnings coming up next week. It might be very difficult to do naked puts on Google or Amazon. It's quite expensive. You might want to do a vertical on it, or you can translate that to a $50 or $100 stock and try to play this based on the expected move. So I did do a 745 put, which almost 2 standard deviation on the Tesla, sold 5 contracts. I had already put one of the contracts about 60 cents. It was about 65, 70%. I like to do scale out. So because I don't know, it's unknown. It's hit me before even the earnings came out. The next one I had put 2 at 85%. I had collected 87% at 20 cents. So I remember I got it at $8.69. I collect the earnings came, the market actually, the Tesla did go up, which I will share you the chart. The Tesla did go up. So that was really good for me because my whole idea was I don't want to get to 745 and by Friday. And so I got out of 2. I had 2 remaining. And what did I do? I didn't wait until end of the day to squeeze every penny out of this. I had put a 10 cents and 5 cents targets. And my reasoning is, and granted, 99.9%, this would have expired worthless. I would have kept my money. And but one of the things happened after the earnings, like Elon Musk was absent. So all of a sudden the market is a little nervous. What is going on? But anyway, the market, you can see it had a little jump on the put side and it came down. And anyway, I don't want for $5 or $10 extra. I mean, I'm happy with 70%, 80% return. This was almost 99%. The thing is, a lot of things can happen. I mean, we could have had, Fridays are notorious, although it's some bad news after market, a flash crash, and an event, external event. So why do I want to squeeze every penny? And that's the reason I do stages. I got 22 cents, I got 60 cents or 55 cents. I want to have as little exposure as possible to markets. My own goal is just collect, my profits and be out of it, because external events could happen, regardless of what happens to, to Tesla. But also Elon Musk is notorious. He could have come out with something crazy. But that's one of the reasons I want to go out at least 2 standard deviation or more, because whatever thing happen, I want to stay out of it as much as I could. So we will discuss it on the stock of the week. So bear with me. The next is talking about Bitcoin. I had a class on Tuesday. I was teaching at 6:30. Didn't know what to do. So I said, you know what? Let me do just a short future on the Bitcoin. It was October Bitcoin, and I just at 6:15, I sold 1 contract. Remember, the margin requirements is $118,000 per contract. So that's why it's the big boys as far as we're going large with the futures market. So they buy tens or hundreds of these because it's a large margin requirement. But anyway, I did 1, and within 4 minutes I was out. So this is a 4-minute trade. Got in at 525, got out of at 415. That's 110 points. Each point in futures is $5. So it was a $550 trade for 3 or 4 minutes while I was waiting for my class. So
it can happen, but it's very volatile. I mean, next day it dropped 3,000. So I can look back, oh, it could have been a $15,000 play, but I mean, but it is very volatile. So I just want to share that little tidbit of our trade on the futures market. ETF. So let me spend like about 5 minutes on this because it's the news of the day. Everybody talks about BITO. So what happened on Friday? The news came out that in 3 days, BITO has shattered the 17-year-old record of becoming the fastest to attract $1 billion of assets under management. Actually, in 2 days, right? And the one before that is the competition for Bitcoin. It's a traditional, hedge against currency like dollar. It was gold in 2004. It took them 3 days. So basically, BITO did 1.2 billion, and with the $2 billion in volume since launch of Tuesday. So basically, I wanted to discuss what is this BITO. Okay, so it's the first one real ETF, and as I mentioned, on Tuesday they launched. Average daily volume is 1.10 billion, and they are futures oriented. So they basically trade the nearest month. So what they do, they go near month, they buy the futures, and then they have to roll it. And this is very important to understand. So what happens as a retail investor, we really get excited. Oh, there is this theme ETF. As I mentioned, it could be corn, it could be natural gas. And then after we get in, we see there's this discrepancy. We see, all right, corn is going up, natural gas is going up. Why my ETF on natural gas, for instance, is not going as much up? What is happening? What is this, again, the separation of the prices? And that's what I want to be careful. Once you see something wonderful like Bitcoin, it's like finally an ETF has come up. What is the fundamental underlining of this ETF? And I put it here. So this is actually, when Tuesday you got in, it was buying the October ETF. Remember, they only invest in the nearest month. So the closest one is 60,800. November is 61,430. What that means is next week on October, on Friday, end of October, it's going to be 29. By then they have to move to November. Actually, they have already started selling October contracts moving to November. All right. So think with me. I am selling $60,800 contract, and I'm moving to something at 61,430. So that is called roll cost. That means without any movement, this is not a cash index. This is not, you're not holding a cash Bitcoin. You're playing the futures on Bitcoin. And again, with the futures, the longer term, as you can see, when we go to December, for instance, you are at 62. Then we go to January, 62.6, 7. February is 63.7. So as the contract's going further, it's becoming more expensive. And that's called contango. And contango creates that roll cost. Because every time I'm buying, again, I have to go with the guidelines. I'm selling at a lower price. I'm buying at a higher price. Regardless of what Bitcoin is doing, I am paying really an expense, a roll cost. So that's when it adds up, and we call it again contango, that becomes a negative price effect on your ETF. And that's what I think it's important to understand. Again, with other ETFs who are futures oriented, sometimes, like you recall, USO had a huge drop, which was the crude oil, WTIC oil, in May of last year, when we went negative.
USO was one of the culprits of that. They were selling the near month, trying to go to uh, the, the, the further month, and they were really paying a lot more, and they were collapsing. So they were paying higher price, and anyway, so they had to restructure the whole thing with the USO, which was all near month. So they kind of got a spread. So sometimes even in VIX, you buy the near month. That's why you have to look at VIXY, VIXM, because some of them are a 3 month, 6 months. So they can actually have like 6 different futures in there. So they kind of a dollar cost average. So basically, they're not, everything is not just in the near month. So BITO is purely, you can see, it's the futures is dominated CME Bitcoin reference, and it is that the near month basically um, um, futures. One of the interesting things that you can see that it's in wholly owned Cayman Island subsidiary. So, you know, that's about the compliance, the Bitcoin laws and other things. So a lot of times you will see a lot of Bitcoin companies or crypto companies, they rather be outside the United States. So just a food for thought. I hope it's more clear, understanding how BITO works, and it could be a separation of prices. This is what happened so far with Bitcoin, and Tuesday, a lot of excitement. Look at the volume. Wednesday, even more excitement. And then Thursday and Friday comes. And actually, consequently, it's really, this affected the futures on the Bitcoin. We went hit the 68,000 plus, and we collapsed. So basically, that's your ETF. So don't just think that, you know, this is going to be a nice, smooth ride with just whatever ETF of Bitcoin or Bitcoin Cash does. This video is going to just 100% copy. All right. I hope that was helpful. One of the other things about the volatility of this BITO, we already have options on BITO, and you can see the sizzle index here actually averages on Friday. So we had about 91,954 contracts already exchanged, and you can see the volatility of the options on BITO. So just remember that if you want to play. I want to go one step further. Before BITO, we did have, these are the investment vehicles you could do. There's a lot of talk about GBTC. The talk has become, you know, again, the Canadian rules and other thing. So they're not pure ETFs, they're grantor trust. I just wanted to compare these. The expense ratio is 2%, assets under management is 31.8 billion, and they're the oldest one. They started in 2013. We also have the OBTC, it's 132 million, but you also have Ethereum, grantor trust. But look at the expense ratios, and these are the things you have to really look into. And we also have a couple of mutual funds if you want to get involved. I mean, one of them is $400,000 with a 1.45%, which came in August 13th. This is more of a target volatility trust. So one thing I want to share, you see the expense ratio for BITO is 0.95%. So you can compare it with the other Bitcoin alternatives. Also, again, one of my favorite things I think about cryptocurrency is actually the blockchain and digital idea of the cryptocurrencies. And these are the some of the oldest ones or some of the ones available out there. We've talked in the past, a year ago, we talked about these ETFs. So I just wanted to have a reference point, and what is the assets under management? The largest one is Block. All right. Okay, I know time is running. Just quickly, in the next 5 minutes, we I mentioned about Tesla. This is what I was thinking was more positive, but again, we don't know. It's earnings. Earnings come, this is Wednesday, it's at the end of the day. The next day, this is Tesla. And what I talked about last week, we were looking at the expected move. This is on Friday's close, $59. And this was like 3 standard deviation. I'm looking at the put price. This is 3 standard deviation at 680 665, I could have collected $1.90, which is we've never been actually even one and a half standard deviation. So basically what I did, I went 2 standard deviation close to 745. This is the next day after the earnings came, that's 745. I had bought it at 169. It dropped to 74 cents because, again, it had already gotten the news of the earnings, no surprises. This 745 right around here, I don't have implied volatility like about 130%. And then you can see the 745 here, implied volatility dropped to 101. So in 2 ways, when you're selling puts after the earnings, these are specifically the earning plays. And that's what I really like Thursday earning plays if you're going to do naked sell, because like Amazon and Apple, when they come, even if you did first couple of naked ones, put sells or calls, you could do either one, is Friday, that's it. So you're not really paying a lot for the extrinsic value of the theta. It's all volatility, and volatility usually collapses. So rather than playing the Tuesday or Monday for like a Tuesday or Wednesday earnings, you can wait Thursday morning and play, let's say, Amazon, or Thursday at 12:59, play Amazon trade or anything that comes out Thursday afternoon after the close, and close it Friday morning, first thing. So you're in it for like 2 minutes, really. 12:59 in, 6:31 next day out, the collapse, the crush of the volatility, just a food for thought. I just want to share what I was looking at. And this is Friday. As you can see, everything is just down to 0. So I could have just let it expire worthless. So quickly, we go to scan of the week is for the short squeeze on Russell 3000. I went with the largest market cap. So these are the biggest ones on Russell 3000 with squeeze. And you can see Morgan Stanley to GE all the way to Palmolive. So just food for thought. The last but not least, these are the most infamous. Look at this. I mean, they're just completely different types, but mostly in technology. Tuesday is a big one between AMD, Microsoft, Alphabet, and Visa. After the hours, we have Robinhood, Texas Insurance, and the before open is the UPS, GE, 3M. Then Wednesday comes, and then you have the eBay, and before it opens is GM, Coca-Cola, McDonald's. Thursday is the big one. You have Shopify before, and I'll tell you, it used to be big, actually, used to follow that, but it's after hours on Thursday. Apple, Amazon, and Gilead used to be one important one, but MicroStrategy in the blockchain and the crypto. And then we have energy stocks I just talked about, watch that. There's the Exxon and Chevron, 66. So anyway, so with that in mind, these are the most volatile ones. Just watch for them. And then these are for your own information, some of the expectations based on the largest, from Amazon to Facebook to AMD, Microsoft, Google to UPS, Boeing, and Apple, the last one. So thank you very much for your attention. I hope it was helpful. I really appreciate you being part of our group, and I think we can stop the recording, Sean, and open up for any questions, any comments.